weeks after the Fed cut interest rates this afternoon. All three indices hitting intraday records early, but only the Nasdaq stayed in the green. The S&P nearly unchanged. The Dow down more than 70 points. Nvidia making history, becoming the first company to hit a $5 trillion valuation. It is up nearly 15% in just the last 5 trading sessions. Gold, meantime, settling back above the $4,000 level today, but pulling back in the last few hours. Shares of Adidas dropping more than 10% on weak sales in North America. The CEO saying nervous U.S. retailers were ordering less product up front as they waited to see the full impact of tariffs. And some more after-hours action. MGM missing earnings estimates. eBay lower after topping EPS and revenue expectations, but cutting Q4 earnings estimates. And Carvana dropping despite a revenue beat. Well, Fed Chair Jerome Powell throwing some cold water in hopes of a December rate cut if economic uncertainty remains high. Traders now pricing in a 30+% chance that rates stay unchanged at the central bank's final meeting of 2025. Let's get to Steve Liesman in Washington, D.C. for more on the decision today. Steve.
Hey, Melissa. Yeah, a divided Fed cutting rates by a quarter point to a new range of 3.75 to 4% as expected. But Fed Chair Powell disappointing markets in the press conference by signaling a far more neutral stance on a December rate cut than had been priced in.
In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course.
That comment triggered an immediate sell-off in stocks that had barely moved from the statement a half an hour earlier, and also a surge in bond yields as markets repriced for the chance of no December cut. The chance of that cut falling from 84% before the press conference to around 67% now, but the probability that it happens in January rising from 42% to 80%. So the direction priced in from markets, that remains intact. The pace is in question. The Fed noted the lack of data resulting from the shutdown, but seemed more focused on the data it does have, showing reasonably strong economic growth, a booming stock market, and no acceleration in the softening of the job markets that they can tell. The vote coming with 2 dissents, one by new Fed Governor Stephen Miron. He once again wanted a 50 basis point rate cut. And from the other side, by Kansas City Fed President Jeff Schmidt sticking out a hawkish position, favoring no rate change. It's unclear right now what the default position is. If the alternative data continues to show no change in the current read in the economy, the Fed may take a Christmas break from cutting, Melissa.
Yeah, it was also interesting to me, Steve. Powell made it sound like the lack of government data is also an argument to stay on the sidelines, to not move. So he was almost throwing it back to Trump, saying, this shutdown is going to make me stand pat.
I think that's part of it, but it's also interesting to see to listen to what he said about the data he does have. We do get those weekly jobless claims. I'll bring them to viewers on Friday morning. They really showed no acceleration. There's also some data on job openings not getting much worse. So the real question being asked in monetary policy terms is, has the Fed taken out enough insurance against a potential weakening in the job market, not an actual weakening?
Steve, it's Karen. Thanks for being on. How much dissent could there be versus what you've seen historically, and that they would still move forward? Is it just a simple majority, or and what if you have dissent on both sides and you don't get a majority? How does it work?
It's a great question. And I will point out that as I reported all day today, that the market may end up being disappointed with the guidance. That reporting came from the comments of Fed officials, in fact, Fed presidents who are voters, many of whom wanted to be cautious. So we have to listen to what people are saying rather than seeing what we want to see. And I think the market has a predilection to do that every now and then, which is it wanted to cut, it wanted the guidance for December. And so it thought it was coming and kind of ignored some of the cautionary signals that were out there that maybe we weren't going to get that guidance that the market had wanted. So I think Fed Chair Powell has engineered his committee with far fewer dissents than Bernanke or Yellen ever did. It's something that he seems to strive for. He wants to bring the committee together around a consensus with a couple dissents on the side. And I think you're right to ask this question precisely, which is this notion that once dissents get too high, I think the Fed chair would probably, if it's not in favor of a cut, he would back off of it.
Steve, thanks.
Pleasure.
Steve Liesman. Michael, I seem to remember conversations in the past about the markets being disappointed because they were baking in all these cuts and they may not happen. And here we are at that precise moment.
We are. We are. We absolutely are. And I think the message was loud and clear. Unless the data changes meaningfully and is meaningfully weaker, they're not cutting in December. And with a 70% chance still priced in that they're going to, I don't think the market quite realizes that yet. You know, the Fed has done a really hard job to justify cuts. Inflation's still high. Core PCE's going up. Yeah, sure, inflation missed expectations by like 1/10, but we're going up. We're going the wrong direction. We've heard transitory 1,000,000 times since 2020, and I'm not convinced that all that tariff inflation is going to be transitory. And the Dallas Fed themselves just came out with a paper saying the neutral rate of employment is basically printing 30,000 jobs a month, and where are we at 50? That's weaker, of course, but it's actually above the Fed's own estimate of what you need to basically keep printing in order to stay neutral on the jobs market. I see no reason to cut in December. I don't think they're going to do it, and that's the biggest risk to markets right now.